The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon till 1 p.m. every market day. My pleasure to be here. Dow's down 8 at 24,170. S&P is down a fraction at 2628. Comp index is up about 6 at 6766. The volatility index is down at 1124. The E-mini that you're looking at right now is up 75 cents. This shows in a nutshell what we're looking at in the various indices. See the way the VIX made this peak D in the Chapman wave methodology? Let me just slide this along here because I'm doing this webinar on Friday, all-day webinar discussing all these aspects. We look for the lowest low bar, merely count each successively higher peak. When you get to the fourth highest peak, I alphabetize them, uppercase going up, lowercase going down, easy to see. When it gets to the fourth highest peak, other things can happen. It can recycle and go higher. Certainly if it goes higher within 3 bars, that's a very important aspect. It can also start to pull back, and then that's when it could have the deepest retracement since it started the peaks to the upside. So what we're looking at here is on the daily basis. Let me squeeze this a little bit so you can see it. Here we go. Since the low that was made at 25.55.50, this is the December contract after the previous peak D and Chapman wave 5 top, it went to 1, 2, 3, 4, 5 in the Chapman wave. This uses only Elliott wave numbers. It has nothing to do with Elliott wave at all. It uses those numbers and it gets to 5. 5 is where you've got to be real careful. And that happens to coincide with the peak D. If you only did it in waveform, that would be leg 7, going to the fourth highest peak. So this is a slightly, it's a modified variation of the Chapman wave. But at 2665.25, it starts to pull back. That's what we were waiting for on Monday. We waited for it for last week. I said the soonest we can get to a leg D, the way we're moving, would be for a peak C Thursday, which meant that Friday cannot see any new highs in the indices, and then a new high on Monday. That's exactly what we got. Huge move down on Friday, big spike up on Monday, and then an ugly candle at the close on Monday, lousy candle yesterday, and now we're sitting just above the 9-period moving average of 26.24. We're at 26.29. The MACD is still quite good. The stochastic's is now weakening at 76%, and the MACD distance between the faster moving average, the green 9-period differential, and the slower 26-period moving average, the red one, still quite wide. And that says that there would have to be quite at least another, in the S&P, probably at least another 10 points or more down to get that MACD to cross negative. But the stochastic is a hint that something's not right. The unbalanced volume made a peak D, plummet to a low, and is trying to bounce off that low. We're going to be watching this very closely. And the 120-minute chart has produced two, as I mentioned to subscribers, and when I posted this in the den yesterday, I said the 120-minute chart, I drew this in to show that there are two fighting patterns, the cup pattern and the arch pattern. Well, it turns out that the arch pattern won, and from 2663, the E-mini plummeted down to 2619, was it? 2620. And the round number tries to bounce. And now what we're looking at in terms of chart formations, and this is what I'll be teaching on Friday, identifying my 3 or 4 candles of importance that I consider to be absolutely integral to the Chapman wave methodology. This is a long-legged doji. What do? I take this and I immediately grab it and I just give you outer borders, and there's that rectangle formation. So a close above the high that was made at 2633.75 earlier today, that a close above it, I would have to say that it must be at least 2 points above it. 2635.75 would be very impressive. and create the 9-period moving average of 26. Now it's at the 120 is 26.28. That's the support. A piercing of the downside, 26.24, says, oh, watch out. We've got a pattern here that says going to test the low that was made right there. Okay, so let's get on with our story. Let's move this away, grab it in the corner. There we go. Continue with the analysis. If I can just get that right. There you go. All right. So on Friday, we're going to be discussing what are the implications of a D. Well, we've got a D in the E-mini daily. We've got a D. Lost my earphone. Let me just get that back again. We've got a D in the S&P cash. SPX.X. There it is. At 26.57. It is sitting right. It just tested this morning the 9-period moving average, the black line. I'm going to be teaching you about the 9-period. I'm going to make it as simple as possible. This is so crowded. I'm going to teach you. We'll go from the naked chart, nothing there, just bare, just the candles. And then we're going to add one thing at a time. And as you say, yes, I've got it, we can move on. And it's going to be so important. I get the response. I need to know. I need to teach you about the inside track. Usually I'd have just two bars, two trend lines to show the outer channel. And then what I've learned over the years is to add the inside track repellent zone. That became a repellent zone, and this will become a support zone. If the S&P at any point in the next week or two tests 26.10, that should be a bounce-off period, because if it doesn't, boy, it better hold the red line, which will be somewhere around 26.59. Okay, let's go on. And the weekly chart, see all the stats are saying still positive, even though it's an ugly candle, and the monthly chart still positive, although there's a hint that we might be seeing some stretching of the upside, and we might be looking at a little elastic band saying, whoops, we need to be pulling back some over the next, going into January. All right, let's go to the Dow. I gave you the parameters. A break above 26.58 in the S&P cash would be very positive. I don't think that can happen yet. 24,534 was the Dow high at what? Peak D. We're out of that position. We have been considering what we should do here. We've already made some decisions. And so the long's out. The core long is still going to be long. The core from 22,290s. We'll see about that. I might have to change that, but so far that's just going to remain a long position. And we will, if we start shorts, we might. You can even add to the short position if certain things happen. Otherwise, you just got to be a little careful. I'm going to paint this red just for now to say there's a real good chance that that might have been a high in the Dow. A break into the 24,173, a push into the 24, right there. Above the candle of yesterday, the high of 24.30, let's call it 24,350, would be very positive. I think that's going to be hard to do. Let's go to the QQQ series. QQQ series is up 46 cents at 153.27. A nice candle today. Tried it out yesterday. Failed at the 9-period moving average. What is the notation in the daily chart? Peak D. 156.69 on the 28th of November. And look at that pullback from 156 down to the 152 level. For this index, that's a big pullback. It's one of the biggest we've had in quite a while since the August consolidation. So watch carefully. 154.20 says, hey, that's good action. A pullback anytime in the next day or two, going back under 152.70.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank bank is a member FDIC and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So the XLF right now has made a peak D. I just want to show how many times. This is the concept is that D is where you gotta take your foot off the accelerator and start hovering over the brake. So that's the XLF. Then I was asked about KRE, which XLF is the S&P Financials. KRE has only gone to a peak C. There could be an alternate count, but going to new highs. I'm just going to say the regional Spider S&P ETF is probably holding up a little better. I'm going to call it C for now. We have to look at it in 2 days' time to see what's going on. If you are long, I'm just going to say that the tail of that Friday low at 57.28 and it's 59.15, just let's give it 40 cents if that's what you're looking at. The question was, what peak is it? Yeah, I've got it as a C, and I could give an alternate count in the weekly, but not the day. The daily, just that's the way it is. If it fails, it fails, because the tide is greater than individuals in this individual stocks in this particular instance. Let's just look at it. I think it's going to hold the 58s over the next day or two. We'll get back to that. The XLF is hinting that it's probably the D and that you got to watch closely. If it makes a new high, that's going to be very important. Let's go on. We want to look at gold. No, we want to look at IWM. Yesterday I didn't get to the list of 12 questions I had from emails, etc. But let's go to IWM. I'll try to add everything that I can today. Now, here's a good example. This has got a very sharp pullback from a peak C at an all-time high. There's no other way I can count it. So we're just going to have to let this play out and say, hey, maybe this is short-term. We're pulling back, and that you'll see some strength filtering into sector rotation, which means that the IWM perhaps has the ingredients to move higher because it's not being affected like maybe big caps or cyclicals. I don't know yet. We just don't know. All I'm saying is it's trading in the wick, below halfway into the wick of Friday's long candle. And that's suggesting, boy, if it does that for another hour, you're going to be looking at a test of the low of 148.75. That's my methodology. We'll see what happens. And the weekly, as I said yesterday, it could go down even more. This is a B, but it can go more into the 140s. It's not time we're looking at here, it's price. So that's a question. Next question was, would I look at the steels? Let's go to the steels right now. SLX is holding the 9-period moving average. It's gone to a B. It's underneath the major weekly peak E, so this could fail. But so far, the steels have been the go-to area the last couple of days, even though they might not have held their strength. So X was the question. Yeah, Dana wanted to know in the Dan. This is it going to another C. Wow, all these Cs. Is this just a mere temporary pullback and then we're going to scream to the upside? I don't know. I'm treating this as a C. I'm not giving it any other count. Everything about it says this is a C. It's acting pretty well. U.S. Steel, 31.44. X is the symbol, up $1.61. And our steel stock that we have is still acting pretty well. You know, all I can say is that let it play out. I wouldn't do anything if you're long. 31.43. I would have a stop, maybe part of my position at 30.80, kind of a lower down on some part of the position. I think this is still going to somehow or other make a D. So I hope that helps you in that. URA, let me do that, and then I want to get to goals, etc. URA is, what is URA? Global Uranium ETF. Yeah, now look at this. Leg C in the weekly, but it's still way under the previous high. I'm looking at the daily, and the daily is in leg. Is that a high? Yeah, so this is very nice because this makes it a lot easier. With a doji candle at the bottom, I'm going to be teaching about these dojis at turning points, etc. Oh, I'm really looking forward to this. This is a perfect time for the webinar. So this is a peak D in the daily of URA 15.24, down 56. Global X Uranium ETF. Watch out. It's the way it's looking with the MACD and stochastic. I would not be surprised if it's going to be pulling back a little bit more. And you've got to watch. Look at 14.50 as key support on a short-term basis. Hope that helps you there. Now, the next question I had was Apple. I haven't even got to gold, etc. All right, well, I want to get to these questions. This Apple is now in leg C to the downside. I'm sorry, leg D to the downside. It is trying to rally today. It's off the low. It's down at 169.58, down 0.06. It made a peak D in the weekly, a leg C in the monthly. Now, this is going to be very important. And a peak F at 176.24 on the 6th of November, and it's been making lower lows and lower highs. I think Apple is in for more of a digestive phase. I'm not seeing it more, I'm not seeing it yet even as crash material, but I am seeing it as weakening. And I would not be surprised, even with the Christmas season upon us, that Apple, in fact, pulls back under 167 over the next 5, 6, 7 trading days. Because if it can hold and get to 172, so it's just a sideways consolidation. So the question was, Rob said, morning Basil, I went short Apple a week ago Monday at 174.50. Wow, nice, very good. I'm thinking it still has a way to go, possibly to 165. Appreciate your analysis on it. Thanks for your help, Rob. So Rob, this is what I'm looking at. 117.84 is the 9-period moving average resistance in Apple. My thinking here is, if you look at the bigger picture, let me just do this so I can show you the data in a bigger picture. This is really a very large arch formation with a little stop at the top, but I would put it this way, that the arch formation is suggesting that bounces would see a lot of resistance in the 170 area, maybe 171. If it breaks above that, you've got to be prepared that it could. I mean, if there's good news about Apple selling into the Christmas season, the holiday season, yeah, it could retest the 174s. I'm not sure about an all-time high of 176.24, not with the technicals the way they are. I'll tell you the warning is, I drew in this Chapman wave falling axe formation, something else we'll talk about on Friday, my webinar, my 10th webinar. But this leg D to the downside, if it breaks this, I just want to check if it's a 50 or 100. I believe it's a 50. Yep, it's a 50. 50-period exponential moving average support it's on right now. It's going to be a very quick run to the 163s. So it's really on the cusp. The MACD is down. Stochastic's not showing strength. I think that this rally is going to fail in Apple. I'm with you. I think Apple is more vulnerable to downside than other little pop-ups. But I think lower lows and lower highs is the theme that I'm looking at least for now. So the next question I had was, I did KRE. What about the yields? I didn't want to bring up the yield chart because it means getting out of something. So let's look at the TNX just for now. That's the 10-year. You see this H that goes to, now, I tell you what I want to do. The H that goes to, I was going to draw on it. I'll still draw on it. This is the 10-year yield at 23.23, down 33 cents. You see the peak F that was made there. This is like what we call a right arm extension because it had two gaps above the last peak. So that's not a rogue wave. It has a characteristic. It's more like a right arm extension because one of the indicators, the MACD and stochastic, one of them had follow through upside action. The stochastic rallied but couldn't hold the rally. So this is really an arch formation. So 23 is really the level to watch on the TNX, and that'll be 2.3%. I'll be right back. Dow's down 29.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's really the TLT that I want to look at. What do we always look for in the Chapman Wave? Ds. What are we at right now in the TLT, the Lehman 20-year T-bond fund? Leg D. And that's going to be really important. Let me just make that change the size there. It should be 12. So what we're really looking at here is that we have a lot of information being thrown at us right now. What are we looking at? This is D in the daily, leg C in the weekly, but it's under the previous C. Could there be an overlapping wave that says it's not going to make a head and shoulders top in the weekly chart? This is the weekly chart, head on the left side, shoulder, head, shoulder, and spike in almost the same amount of time to a leg. This is A, this is B. Oh, okay, it's only in gray B. It has to break above this level right here, 120, 129.57. 129.60 starts leg D in the day, in the weekly and in the monthly. And my contention has been that bonds are going to really push much higher if, in fact, we have market weakness, because money will flow from the insecurity of securities, equities, into the so-called safety of bonds. We'll see if that happens. Now, here's something that's very important. GBTC, this is gold. This is not gold. This is the new gold. It is Bitcoin. I've got it as a peak D in the, this is the Bitcoin investment trust. This trades market hours, ho-hum, as if nothing's going on. Meantime, overnight, you could have a 30 or 40% move up or down either way. So all I'm looking at is the benchmark that I'm using here is the only one I can. I don't get Bitcoin. I must try to find it. I haven't found it yet. So the only thing I've got is the 9:30 to 4 o'clock trading vehicle, the GBTC, trading at 1645, up 73. I remember it was in the summer, and we were here in a leg F. That was the end of the summer. And I was, is that right? And I was giving a talk, and I said, wow, we've got a leg F. This could be a bit of a pullback here. And let's see what happens. I'm just trying to think. I think it was in August. Yeah, it was late August. And we hadn't made the F yet. And I said, well, I'm watching this because I was asked, would I trade it? And I said, well, it's around about 1,000. Yeah, I think it was there. It's around about 1,000. I said, if it had to get down to the 450s or 500 area, yeah, maybe, because then it could have about, I didn't do that. It did it exactly. It went down to 481, and then it ran up. And not only did it run up, it spiraled to the most recent high, leg D, at 1905. This is on fire, but I'm going to suggest to you that from the chart formation, regardless of any news or whatever, this is saying leg E/C in the weekly and Bitcoin Investment Trust monthly in leg F. It's getting a little toppy. It might need some kind of a consolidation. Maybe it fills the gap at 1,200, where it spiked on the 27th of November. It went 1,200 to 1,357 in the blink of an eye. I don't know. All I'm saying is that this is something to watch, and this has the characteristic. It's not quite the Chapman wave Roman candle. I'll talk about that maybe tomorrow. We'll see what happens. It says if Bitcoin at any stage trades in the 1,497 area, 1,495 area for more than 2 to 3 60-minute bars. I usually like 120, but let's call them 60-minute bars. There's a real good chance it's going to test the low of yesterday, which is at 1350. So keep that in mind. These are just techniques we're looking at. Okay. Now, I had a question about crude oil. Let's go straight to crude oil. Crude oil is down sharply. It's down 56.23. We were long a commodity index, which had quite a bit of a weighting in the crude oil sector, and we took profits this morning. I said, let's raise the stop we're getting out, and we did that. So it was a nice gain. I can't remember if it's 8% or something like that. It was much higher, but I've been trying to keep these things as long as possible, but I'm not taking risk. That's it. We're building up a cash position, and that's important, and we're starting some shorts. So crude oil, peak E in the weekly. This is a big failure in the daily. I'm going to have to call it an alternate count F, and it's probably F right now. The MACD was bad. The stochastic was good. Now it's not good. It's 62%. Crude oil is somewhat vulnerable. Let's look at USO. It was a question I had. USO was it a short? You know, oops, don't do that. There it goes. I'd say that I think that this has the characteristic of a B. I would have to call it an alternate count GB. This is what alternate counts are for, especially when the MACD is failing and the stochastic hasn't made an equal move to the upside when the last peak was made, especially if it's a D, E, or F. And this is what happened. So this became a right shoulder failure pattern, and now it's falling. So leg E in the weekly went to a peak E because there was no new high from 179 on the week of the 24th. It was 100. 11.78, a penny lower on the week of the 1st of December, last Friday. That says to me, got to be careful. Under 11.16, the 9-period moving average in the weekly chart, it says chop, chop, chop. Crude oil is going to probably make lower highs and lower lows. It doesn't say it has to crash anything. The MACD is still very strong. The stochastics at 92% in the weekly. So I'm suspecting, look at the USO, 11.25. I believe between 11.08 and $11 is your support, and very strong resistance in the 11.50 to 11.58 area. Okay, next question was, that's Apple. Narrow spread. Yeah, I'll get to the spread in a moment. Another question was RB. Let me see if I've got RB here. I don't think I've done any work on the RB. RB is pulling back. Ooh, no, it's like crude oil. It's the same sort of thing. And the weekly has gone to an A, B. Oh, it's in a C. Yeah, this could be a peak C failure. That's never good. So RB is what? Continuous contract for Harbor Blend. Okay, it's the same thing. Okay, we're in the same situation there. So yeah, just be real careful. I think it's going to be pulling back some more. So the next question was, hey, whatever happened to the airline index? Airline index has gone to a C. So many of these indices have had good technicals, gone to a C with a little doji bottom. I'm going to be talking about these particular candles. You don't have to know much about the Chapman wave technique, the lettering, because we'll do that. Oh, wait a minute, that is a D. Very good. 86.83. Here we go. Airline index just made a peak D confirmation. Be careful. A, B, C, D. And now I'm putting the plus sign right there. Yeah, just be a little careful. The crude oil pulling back should have helped it. And in fact, it's down a penny at 113.89. It has made a leg C in the weekly chart. That's improved. Yeah, I'm not telling you it's just sure to go long. I need to do a little bit of work. I'm not going to do it in the spur of the moment. I'm going to actually put an up arrow to say, I believe there's a buy mode in the weekly chart. It could change. Now, here's a pattern that I'm going to be talking about that we've seen so many times. The one I just mentioned for the E-mini 120-minute chart. Look, here it is again, where the lowercase h successfully tests the left side by not breaking. And then there's a very strong bounce. That bounce often can lead to a move way above the arch high. That's exactly what happened in the airline index, XAL. It went above 114.28. It's in leg C right now. So these are patterns. What do you need to know? You need to know nothing. You're looking at a chart, you see, oh, that looks like an H. Oh, that looks like a U. That like a cup. And that's what we're going to be learning and studying. So there's plenty of time to sign up. We'll be sending you the CDs a lot. Go to the front page of TFNN.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Question, could I prove about gold post-Fed more meeting next week? Let's to go long in the next few weeks. Okay, so a couple of things, a couple of questions I had just all over the show. I like to look at Berkshire Hathaway. Buffett Enterprises is trading at 196.33 BRK.B, up 26 cents. It's made a peak B in the daily at an all-time high. Just for now, I'm going to call this a leg F in the weekly chart. Probably I should just call it F/B. I'm going to. The F/B is still more bullish right now than bearish. And the monthly chart is in a leg F. But look at this. These are the techniques. Look, I drew this in ages ago when I did some work on this for subscribers. Look at this trend line right here. There it is. Now I'm going to keep moving it up. Look what happened. We went right to the exact trend line, maybe snuck above it just by a tad. And the inside track, repellent zone, it's all green. But this is where we have to watch out because it's in a leg E in the daily, in the monthly. MACD is strong at 95%. MACD is strong. The stochastics 95%. I'm watching this closely. Why? Because Buffett, I feel very strong that Buffett really is America Enterprises. He's in everything. And if Berkshire Hathaway is doing well, probably most of the sectors that he's involved in, which really is insurance, banks, it's really very important areas. And he's not buying the stock, he owns the companies. That's really the big difference why I really think Buffett is one of the brilliant American entrepreneurs, is that he puts his money where his mouth is because he has the company. If it doesn't do well, that stock's not going to do well. He doesn't just buy the stocks and he moves paper around. He has the actual building. He has the place. So I'm looking at this, I'm saying this is very bullish, monthly. So far, the doji candle says, oh, bullish, but be a little bit wary just because of the speed and usually after massive green bars, if you get a doji candle on Friday, you're going to have to watch this closely for the next week because if it takes out at 196.42, for the next week it closes under 193, it's a real problem. 192, let's call it 192 because 192.24 is the 9-period moving average. So it needs to close under that. But so far, so good. It looks like it wants to squeak a little bit higher. Okay, so that's good. So Berkshire Hathaway parameters 192, very important support. A break into a new high says it's going to the 203s. That should be a market positive in a way. Okay, so that's the reason why I don't want to go overly bearish, but I do believe you can go to the short side in certain areas, but you got to have fairly specific levels. Now the question is the EU. I never got to the euro, I never got to gold. I'll get there right now. The euro, ooh, I don't like this slowing down here. I got a lot of information up, maybe a little too much. Is there anything I can get rid of? Nope. Oh, don't do that. I need you. Okay, R, Control R. There it goes. Okay. Nope. Yeah, there it is. So euro is pulling back after a peak C in a counter trend move, right? So that says watch closely, because if the euro at 1.79 down a little bit actually breaks in the next week and a half, now I'm going to give it just 4 days. If it takes out 1.171, the low of the 21st, I would suggest that that H pattern that I drew in the weekly chart, you're coming back down and you're going to be back in the rectangle formation quite a bit. That's what you got to watch. If there is a pop to the it doesn't even have to be 1.188, that's going to be bullish. At least bullish to say you could get your leg D. Let's look at the dollar, DXY. Now we are still long the dollar. Oh, nice move up in the dollar. So the dollar's acting very well. We got in on the left side, right side price time match on the 8th of September with a 70-week arch formation, hit the exact low, 91s from May of 2015 or 16. And then what happened is it ran up very nicely, pulled back. Now it's trying to run again. So that's a good sign. And that says gold. Watch gold right now. What is it doing? Gold is a little delay there, huh? I don't like these delays. I don't have time for delays. Let's move. Come on. Okay, here we go. Gold is, no, there's a sign that says it's coming up. A little sluggish there, gold. You sure that's leg E monthly on what? Okay. Yeah, gold is up $1, but it's had a big smash to the downside. I'm suspecting that, this is the thing that I'm going to be teaching about trend lines. Look, I showed you the Berkshire Hathaway trend line. Look at the gold trend line in the weekly. Hey, and the question is, Sean wanted to know about gold. You know, let's see how it handles this trend line right here. Actually, it's now under the trend line. This trend line, remember I had in the Chapman wave, there's a technique I use sometimes, it's not GAN, it really takes a particular pivot point and just moves up with very important trend lines, dashed trend lines that make a fan formation. Look at that fan formation there. There's another one right there. And right now what we're doing is we're breaking below the support of the last fan line. MACD's negative in the weekly chart. Stochastics at 20%, showing no sign of strength. I'm a little concerned about gold. It's making the arch formation. I'm going to be talking about that. Look here, this is from my my webinar that I'm producing. Where did it go? Right there. Look, there's GG. I started this when I wanted it as a rogue wave right there. Perfect example. I wanted it also as the arch formation. I got a whole thing in my webinar based on my CD introducing the Chapman wave methodology. Oh, where did it go? The dreaded H is chapter 17 right there. So I have a whole thing on this. These are the patterns that we're looking at. I wanted to show this pattern in GG. I had no idea whether or not at that point it was going to break the low. I was trying to show it as an example right here. This is the daily, and there it is. It makes the arch. There's the lowercase h, the back of the H. Here's the arch formation, and it retested. It actually went, here it was the low was 1261. Here the low was 1251, and it took it out in exactly left side. This is what I'm going to be teaching, right side price time match. And there's a rule I have about that for those of you who know it. And the rule says that within 1 bar, within 2 bars of taking out the left side low, if it closes above, that can be good, but it's got to quickly go to the previous peak of importance. That would be way up in the 1340s. But instead, if it breaks down, watch out, because it could go sharply lower, and that's exactly what it's done in leg D to the downside. Gold core, GG trading at 1209. I did this study when it was back in the 13s from, I think it was right there. And it was just starting to come down, and then I put this in. I watched it the next day, it went down, and I said, great, this is the pattern we're going to be looking for. It has 3 patterns that we want to study. So gold core is exactly the pattern that I'm looking at. And what happened? You've just got gold in the weekly chart, continuous contract. It has no more than 2 weeks to break and close above 1.267. That's the weekly, but let's go to the daily. And the daily says, uh-oh, you're breaking here. This is the second day below the closing. It could be closed below 1.268. the low of the 27th of October, and it made a peak F top with a sign in Chapman wave doji candle following, and the magnetic broke down, stochastic broke down, on balance volume is okay, but it's making lower lows. Wow, watch out with gold. That's all I can say. At least in the short term, let's look at it again. We'll keep looking at it, obviously, but I'm suspecting that from the pattern that we're looking at, that gold, because of the dollar strength, and this is something I've spoken about for a while, I'll talk about it when we get. We got one more segment to go. Still got a bunch of questions here.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, folks, we're back, and the Dow's down 4, S&P's down just a 10. I was asked about copper. Copper has to, look, yes, this very big arch formation. Copper has to hold the left side low of right there of September the 22nd, 2.9170. Otherwise, it's going to form that same pattern. But what I said before, well, first of all, I have to put a down arrow here. That down arrow, everything's been met for a down arrow. Weekly is in a sell mode. The monthly is in D, and that's what I've been saying. I'm a little concerned. Then I had an email right a moment ago. Julie wanted to know about FXI. Look, FXI, I can't remember now if I featured it or not. I was going to. I typed it up. I'm not sure if I actually featured it for subscribers. But the FXI is in a peak. It gapped up to, and this is a perfect example of a rogue wave, to a peak F top right there. And this is the iShares China Large Cap ETF, 48.36 on the 22nd of November. And now it's down to the 45s. And the weekly chart at a G, an unusual G. It hadn't met all the specs for G. I hope I can do that. Let me write this down. FXI G, of course this pen doesn't write. FXIG, I'll know what it's for. It's for the instant restart, which is not an instant restart, but is really a perfect G. And yeah, just watch out. FXI is shorting. Well, now to short, the 45.5 to 46.30 area is really the best. If you're short now, you can start your small position and then add it. I think that this is a problem. And she mentions that China's mentioned that they are going to stop government buying for government programs. So we'll look at that. Now, I don't want to take any more time because I need to just remind you, time's running out, because I really would like you to check the front page of TFNN for my December the 8th, Friday, all-day session. It's going to be going through all these particular techniques, just step by step. It sounds, when I went through it, I said, I'm going to make absolutely sure it's not overwhelming. I want to make sure that everybody gets what they need to get. All this is, look how easy this is to see. An arch formation, yeah, you can put the letters in, but it's the patterns. Look, it retested and then it broke. We saw that live just a moment ago when I went to the GG chart in real time. Look, there it is. There's the GG chart, it broke. These are patterns that are so important. I love teaching them, and I'll be going through them, and I'll be with you for 30 days after that. Any questions you have, check it out, front page of TFNN. We need to send you the CD you get for free, plus a month of my subscription for free.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.